Howdy folks, and welcome to the Daily Coin. My name is Rory, and today is Friday, July the 22nd, 2016. And it gives me great pleasure to welcome back to the show for our ongoing series on gold and silver and various other subjects, Mr. Louis Cammarosano, whose work you can find over at smallgold.com, and that's SMAULGLD. Louis, how you doing today?
I'm doing grand, Rory. It's Fired Up Friday.
Fired Up Friday. Woo! Well, let's jump in and see what happens.
All right, Rory, let's do it.
What's on my mind today, Louis? We'll get into the numbers here in just a minute, but our underfunded, underperforming, and unable to pay pension funds, which is what I wrote about earlier today. And Dave Kranzler and I have discussed this at length on Shadow Truth, and we're going to have you on Shadow Truth next week. So
great.
Everybody look out for that. We'll have Louis on Shadow of Truth. And what bothers me about the pensions is exactly what you just said. Everything is fake, and all of these people have their wealth tied up in these pension funds that are underfunded. And a lot of the bigger pension funds, the state, local, and federal pension funds, are tied to treasury bonds. Treasury bonds are not producing any return to speak of. I mean, it's so little, it's inconsequential. Doesn't even meet inflation, real inflation, not the made up nonsense that we're told it is. What do you think about all that? What do you think about people still continuing to have their wealth tied up in these pension funds?
What I think is, what I've thought for a couple of years now, is they will use the concept of underfunded pension funds, even underfunded Social Security or no funding in Social Security, to force people into treasury bonds, which they can issue at will and tell people they're safe, they're guaranteed, and by the way, you have to have them. And because look what happens in these private pension funds. There's no money there. You can't rely on them anymore. And we can't keep propping the stock market up. You know, we can't guarantee a return there. So we're going to have to start issuing more bonds. And by the way, these bonds are good for the country because now we can issue all these bonds and we can do infrastructure bonds and we can do welfare bonds. For any program we want to initiate, we can issue a bond, and guess who buy them? You'll buy them because they're safe and they're patriotic. Now, that's how the current regime might handle things. Even a guy like Donald Trump might go for a scheme like that because he is somewhat of a nationalist. And nationalists also have a tendency not to consider the individual and free markets. They sometimes consider what's best for the country first. So you can conceive of a scheme where the government would say, look, we're going to help you if you help us, which basically is just we're going to take your money. But under the guise of helping you fund your pensions because you can't trust all of these pension fund managers. They're either greedy, they're the 1%, and so on. So put it with good old Uncle Sam and set and forget. And basically, if you don't have a retirement fund, just like if you don't have health care, we're going to make sure you have one. So if somehow you manage to get a job, we'll make sure we take that money out. We also take it out for Social Security, but don't count on that. We're also going to have to take some money out to buy government bonds of all sorts as a mandatory thing in your payroll deduction.
Do you think that ties into what Obama was discussing with
the Myra?
Yes.
Yes. In fact, I had written a year earlier than Myra that would be what the scheme would be. Myra was very tepid in kind of it being a voluntary plan. And hey, look at this, just like the Indian monetization scheme for gold. Hey, you can get some interest on your gold, just give it to us. And they're like, well, you know, that scheme, they only got 3 tons out of the 18,000 tons that exist in the private hands of Indians. And most of it came from temples. And I doubt that people are buying the Myra scheme either. And when the schemes don't work voluntarily and the incentives don't work, then they say, look, okay, we asked you nicely. You didn't buy them. Guess what? You have to buy them now. So I think that's, and Myra sets the scheme for it because it can be payroll deduction all they have to do is, just like they do with anything else, they institute an order and they say that the money comes out of your payroll every month in certain amounts, and there it goes. And it goes directly into government bonds, just like they take Social Security out, just like they take Medicare out. And you have another payroll deduction. So basically, half your money is spoken for in taxes and deductions before you even get the money yourself. And then you get to go to the free market with that money and go buy Obamacare at a higher price. And then you can pay your state and local taxes as well with the money. So basically, they've taken all of your choices of how to spend your money out of your hands, just like they try to control the stock market. Central banks buying. Swiss National Bank, Rory, owns 1,100 separate equities in their portfolio.
God. Are you
okay,
serious?
They own IBM, Apple, all kinds of stocks. So you talk about fake. They set interest rates. They buy government bonds in the ECB. The Fed bought mortgage-backed securities bonds that were worthless. They buy U.S. treasuries with money they create. And then the Swiss National Bank buys equities. They have an equity portfolio. So the stock market going up isn't because the market is, people are buying it, they're happy about this robust 1.2% growth. No, it's because central banks and central planners are printing up money and buying, basically, and manipulating the market the way they want it to go. They want higher equity prices, lower gold and silver prices, and they don't want to pay interest on bonds, so they set rates at negative. So you have an entirely fake economy. And then the media just cheers it on as if it's normal.
Well, isn't it? I thought it was normal.
I'm sorry, Rory. You're right. I shouldn't get so excited about this stuff.
Oh, well, the central planners, they're a lot smarter than the free market, don't you think?
They're smarter in the sense that they think they can control it, and they have been able to control it, Rory. That's the real scary thing. And we have, a lot of us are conditioned to think that somehow free markets will override. Yeah, they will eventually. But we've all been mistaken in how long that might take. And the longer that the manipulation goes on, people use the beach ball under the water, it pops up. In some respects, the longer the manipulation goes on, the firmer their grasp on this whole thing becomes. Because people accept it, people buy into it. And, the theory in Austrian economics is that malinvestment eventually gets liquidated. The entrepreneurs that were tricked by all this, they get wiped out. No, they get bailed out. And entrepreneurs now pile in when they see the Swiss National Bank is going to they have Amazon. Okay. Now, why would you buy a company that doesn't make any money? Doesn't matter. If the Swiss National Bank is buying Amazon, you might as well buy Amazon and ride it up too. Who cares if it makes money or not? They've changed the dynamic as to why the stock market goes up. It goes up because they add liquidity or they directly buy shares. So you've got companies that make no money that would otherwise be, quote, liquidated, but instead they're funded with public money. So you got companies that are public that haven't made money for 10 years, but have so much public cash that they raise in the public offering, and the stock continues to go up, that somehow that seems normal. Sure, you buy the shares. Who cares whether they make money? They've got they got 300 million in the bank, so they're not going to go out of business. And as long as people keep pushing the story, it goes up. So they learned after the dot-com crash, they can't allow crashes. This all started with Greenspan in 87, when they created the plunge protection team, was that the most important thing the United States had next to the dollar, Rory, was the stock market. If they can convince the world that this is the place to put your money, they can just keep issuing companies, putting them out there, raising capital. More money comes into the stock market, so you need to buy dollars, you need to hold your cash position in treasuries. And if the stock market keeps going up because they keep pushing it, it's mission accomplished. And look what's happened this year. The stock market, every time it goes down. In fact, this year, the stock market, the Dow Jones, has outperformed gold, Rory. Even though at times it was down 20 and 30%, 2 or 3 times this year, the stock market. After Brexit, earlier on in the year, the stock market crashed and it comes right back. Did the economy improve commensurate with it coming back? No. The Fed just stopped talking about raising rates, and looks like more liquidity was added. So now stocks turn out to be just as good of a bet this year than the massive increase in gold, if you just bought and held. Now, no one buys and holds, high frequency trading and so on, but still, it highlights that they are manipulating the stock market the way they want to get that result, which is a higher stock market.
Management of perception economics.
100%. It's got nothing to do with Austrian schools, supply and demand, malinvestment. Malinvestments, unfortunately, are the ones that pay the most. Companies that lose money make you money.
You mean like Amazon?
Well, Amazon's a classic example. The only difference in Amazon, they actually could make money if they wish to, but they don't. I can think of all the other unicorn companies that look at Tesla, Solar City, all these companies, they don't make any money. And not only do they not make any money, they don't make money with government subsidies.
It's ridiculous.
And why would a company that relies on government money and never makes money, hasn't made money for 5 or 10 years, have market cap in the billions? Well, Rory Lewis, you don't understand how it works. Yeah, I do understand how it works. It's not how it should work, but it is how it is working. And that's the danger where you have this fake stock market and fake economy. Because people are working. They're working, Rory, getting a paycheck, being paid not out of profits that the company's making, but out of the government subsidies that they've been given and out of the public money that they raise in the stock market. And so the people working there don't really have real jobs because they're not producing anything that makes a profit.
They're just making widgets that go on the shelf and sit there.
At a loss.
At a loss.
And the worst part about a company like Tesla is they're not even making products for the masses in the socialist utopia. They're making cars for rich people, for the 1%. I mean, they're subsidizing people that have a lot of money, that work in Silicon Valley, work on Wall Street, to buy these battery-powered cars at $150,000. They're not even subsidizing Volkswagens or smaller socialist cars like the Yugo. Remember that one?
Yes. The Yugo.
You go, I go.
Yeah. It gone. Well, the reason that we're here is not all that, which all that's good stuff, but is to get caught up on the sovereign gold holdings, that of Russia and China, India silver, and you've been producing some really great work around these numbers. And if you would, Lewis, lay them on us.
All righty. So where do you want to start? You got Russia, China, India. Let's start with China. All right.
Sounds good.
So China in May, Rory, if you remember, didn't add officially any gold to the People's Bank of China's reserves.
Right.
And that started people thinking, well, maybe the price is too high. Maybe they got something up their sleeve. They've got enough gold now. They don't need to add any more. Who knows? But in June, they came back and they added 480,000 ounces of gold, which is about 15 tons of gold. So it looks like they're back on track. China is playing some interesting games with the yuan, with their overall reserve portfolio. So who knows why they didn't add any gold in May, but they added 15 tons in 14 tons, I think it was, and 14.9 tons. Yes, so 15 tons in June. Now, China is the second largest country. This is the country that adds the second most amount of gold to its bank reserves, its central bank reserves. The largest is Russia. And Russia has held that for the last 2 years. Now, between Russia and China, Rory, they buy, of the central bank buying, about 80% of the gold that's actually added. So between the two of them, they're eating up most of the gold. And both countries have significant mining in each of their countries. So China has the largest mining production of about 450 tons a year, of which they don't add all of that to the People's Bank of China, but it all stays in China and it ends up in different entities. And they also import more than twice that amount through Hong Kong. So there's a tremendous amount of gold going into China, tremendous amount being produced, and 15 tons a month ends up in the People's Bank of China. So now they're up to about, I think it's 1,800 tons of gold officially on their balance sheet, 1,823 tons of gold. Now over at Russia, they also have significant mining of about 350 tons a year, and they pretty much take up all that. But last month in June, they added 600,000 ounces, or about 18.6, or about 19 tons and they've added the most gold now of any country over the last 2 years. So they have almost 1,500 tons. That puts them sixth in the gold holding nations behind China. And they have bought over the last year about 50% more gold than China has. So Russia's been involved with, they have sanctions against them. They're operating in Syria. They're basically trying to create their own. They only have about 80 billion worth of U.S. Treasuries left. They're keeping that number between 80 and 100 billion, lower than 100 billion, and of their overall reserves, which are about 400 billion. So, unlike most countries who have the bulk of their reserves in U.S. Treasuries, Russia's now holding yuan. They're holding gold. They hold some treasuries, so they're diversifying. India is a different story. India, I would say the government is on a war against gold. The imports rose a bit in April and May, but they're rising. I'm talking about month over month. They are significantly down over last year. And that's all a result of two things, mainly two things: increased import duties on gold, and then a sales tax on gold, which they just loosened a bit for small jewelers. They don't have to pay the 5% sales tax, but the larger ones do. And that's probably where the bulk of the gold is sold. So Indian gold imports are down, and that is a result of government action. And as we mentioned at the top of the show, the gold monetization scheme, they're also trying not only to not bring gold into the country, but also to get the Indians who have about 18,000 tons of gold in private hands to the government. And their stated reason for doing this, Rory, is it screws off their trade balance, because if all this gold comes into the country, then there's imports coming in. They don't have enough exports going out. So they figure they can stop the imports of the gold. What it does, it just increases the smuggling. But as the official numbers, it has slowed the pace of gold coming into the country. No one knows whether it's slowed the actual demand. Although there are some indications, if you can believe some of the press reports coming out of India, which the official media is very anti-gold. They tout the gold monetization scheme. They tell people to go out and buy those bonds, get them now. That this tranche is not going to be around next year. But if you read what they're saying, is Indians, and I do believe this, Indians are price sensitive on gold. They buy gold regularly. It's not like they're chasing an asset. They're going to buy a physical asset. They're not buying paper that they're going to trade from day to day. So when the price does rise, they do wait for pullbacks to buy. So there's probably some validity to why not gold demand is down in India because of price. Silver is also down on imports, Rory, from last year, but last year was a
Now, you're
massive.
talking about silver imported into India.
Yes.
Okay.
Now, silver Indian imports last year were just massive. They ate up about a third of the global silver mining production.
Good Lord.
It was an incredible amount. It was about 8,500 tons of gold. It was about 270 silver, about 275 million ounces of silver going into India. Now, India has no gold mines and very little in the way of silver mines. So India is all imports. Now, this year, the silver imports are down, but they're still on pace to eat up about 20% of the global silver mining production. So they might import at the current pace. They've imported through the first 4 months about 1,600 tons. So if you do the math, you can see that if they import about 300-400 tons a month, they're still gonna it's 13 million ounces a month. They're still going to bring in massive amounts. Through the first 4 months, they've brought in 51 million ounces of silver. That's down 38% from last year.
That's a significant drop.
Yes, but 51 million ounces is significant because that's more than the U.S. Mint in a record year will ever produce, and that's only in the first 4 months. So multiply that times 3 for the next rest of the year, and you're at 150 million ounces, which is more than the entire mining production of Mexico, which is the largest silver mining country in the world. So Indian imports are down, yes, 40% down, silver imports, but they're down from a record year of 8,500. And of course, as you know, Roy, they have the solar plans, and also because there's a war on gold, the imports are coming into silver, and silver is much cheaper. So they haven't really gone after the silver imports as screwing up their trade balance because the dollar values aren't as high. But there is a reduction in the silver demand in India from last year. But as I mentioned, if you go back prior years, this year will turn out to be like 2011, 2012, about 5,000 tons.
That's
It was just,
that's
it
a
was
significant amount.
yes. When it's a third, anything that's 20 to 35%, when you're in that range and you're one country and you're gobbling up one resource like that, that is significant. Now, I mentioned those numbers, 20 to 35%. We have to understand too that China produces over 100 million of the 850 million ounces of silver that are produced every year. Well, guess that 100 million doesn't count because that doesn't leave China.
Right.
So basically, now if you take your 275 million that India imported last year, and you take it out of the available silver, extracting China, you're close to 40% of the available silver for the rest of the world, if you don't include China's production.
And China also imports about 100 million ounces, right?
Well, there you go. That I don't know. I don't know what they import, but the point being is, yes. And of course, if you just look at the pie, you realize that India had to struggle last year to get that amount of silver. And perhaps the reason they're not importing as much this year as last year is they just can't get it. There's that possibility.
There is that possibility because, like you said, you have these massive solar programs that are going on that has been well documented, and not only in India but in China and Morocco. And this is just three. This is three programs that we're aware of. This is to say nothing of Germany, and Germany is the largest solar energy producing country in the world. So they're constantly turning over or bringing online new solar panels constantly. I mean, that silver's got to come from somewhere.
Well, you mentioned silver's got to come from somewhere. The one thing we didn't mention was the silver supply this year. We're not sure what it is. Now, remember last year, silver mining production increased, but it didn't keep up with the demand. This year, silver mining production was projected to decrease. Now, there's indications that in some companies, like First Majestic, silver mining's increased, but we don't have the numbers yet that show that there has been an increase or a decrease so far in the first 6 months definitively that on the silver mining production. It's quite possible that silver mining production this year in the aggregate is lower than last year, which also could account for the fact that India can't bring in as much silver, import as much silver this year because there isn't as much being mined and there's demand elsewhere.
And keeping in mind that all of these numbers that we're talking about as far as silver doesn't include any of the coins, bars, and rounds that are being produced at all of the government and private mints around the world. Period.
At record levels through the first 6 months, ahead of last year's record levels by 15 to 20%. So again, the demand for silver on as you mentioned, the sovereign coins, when you take sovereign coins and privately minted rounds, that takes up 22 to 25% of the silver mining production last year. Now that's up 15%, and that's 20 to 25% of the silver mining production, including the Chinese numbers. Strip the Chinese numbers out, and now coins and bars in India are taking up well over almost 60% of the available silver. Now, some of that's industrial, but that highlights where does everybody else get their silver from?
Right. Oh, which brings me back to my favorite question for the last 3 years and counting. Where's it coming from? Don't know where it's coming from because I don't do that fuzzy math. I just look at the numbers. But that's a lot. There's some very significant changes, and it's interesting that China took that break, and now they're, as far as their gold acquisitions, and now they're right back on pace at somewhere right around 15 tons.
Mm-hmm. Russia too. Russia only did three tons in May too, but now they're back with 19 tons in June.
Yeah, see, so I mean, they're both, and wasn't April down slightly for China as well? Weren't they around 10 or 11 tons?
Let
So
me
they've
check.
increased their numbers as well. I
Yeah,
mean,
they're at 11.
yeah.
But China's been doing since January. They did 19, 16, 10, 9, 11, 0, and 15.
So they're right in where
Yeah,
they
they're right in the sweet spot of where they are. Russia has a higher, they do in upper teens.
and they aren't messing around. They've had it. They have had it. So, but anyway, is there anything else we should cover there, Mr. Lewis?
Don't think so, Mr. Rory.
Well, it's always a pleasure speaking
Likewise.
with you. And we've been speaking with Louis Cammarosano, and you can find all of Lewis's great work over at Small Gold, SMAULGLD.com. Louis, thank you so much, and we'll speak with you soon.
Thank you, Rory.